Good afternoon, everybody. My name's Ronnie Withager. I'm a CPA, and I wanted to jump on here and do a presentation for you guys today on the CARES Act that was recently passed by Congress. For many of you guys, you've come on here and you've heard me do webinars before, and you might know that there's a chat function in here. So if you have questions as we're going through any of the items that we're going to go through today, feel free to drop in and write me a question, and I'll do my best to answer those questions. I'm going to kind of stall a little bit and let people kind of hop on here, but if anybody would just kind of pop that chat open and just let me know that you can hear me so that I know that the audio is working good. I got to make sure that the technology is working good here, but feel free to pop something in for me so that I can see that. For everybody that's attending, thank you for being here. I know that in the past couple weeks, we've really just kind of had a thank you for the people who are saying that you can hear me. In the past couple weeks, you know, from a legislative standpoint, there really has been some exciting things happen from just the way of the world right now. I know that a lot of our lives have changed quite a bit, and all of us are kind of doing what we can to kind of move forward and try to take care of what's happening. So anyways, I hope everybody's staying safe. I hope people are healthy. I unfortunately know a couple people who got COVID-19 and fortunately are recovering and are better. But I just hope that everybody's loved ones are safe and that from a health perspective that we can kind of, you know, move forward and, you know, kind of work out the kind of financial things and struggles that we're kind of going through right now. What I do want to say just to start out about the CARES Act is that this is probably one of the greatest pieces of legislation that I've seen when it comes to helping small business, helping individuals, helping big business, writing some things into the tax code that just make sense. And you kind of wonder why we weren't doing these things, you know, 10 years ago. But and I'm going to highlight some of those things today. Mark Cuban called this the greatest stimulus legislation ever. And so from my perspective, I mean, obviously the economy's really taken a pretty big hit and a lot of people have lost jobs and things like that. But I do think that this bill really lays a foundational piece for a speedy and quick recovery. And as we go through a lot of this stuff, you'll be able to see why I kind of believe that. So, you know, I think we've got most of the group that's going to be here today. I'm kind of scrolling through the list here, and I see some really familiar names, and then I see some unfamiliar names. So I appreciate you guys sharing this with other people. But let's kind of hop into it. I'm going to give you what the agenda is going to be. I'm going to talk about the personal tax stimulus and just a little bit about unemployment benefits. I'm going to talk about the legislative changes in the tax code that are going to come out, and I give you a little laundry list of things for anywhere from student loans to charitable donations to improving commercial properties, and then some tax credit type stuff. And then, you know, probably the meat and potatoes of this whole thing is going to be the small business loan options. I know that's probably the reason that a lot of you guys are on the call today. And what I want to probably preface here is that I started helping people fill out these applications about a week and a half ago. And, you know, I had some people that were really on the ball with this. And even just within the last week and a half, I think the SBA has become overwhelmed and they started dropping requirements that they had just because there was no way that they were going to be able to really sift through everything that would typically be requested from you know, receiving an SBA loan. So I'll say this, that things are changing almost daily on this. Things are changing daily. So I'm not going to know the answer to everything, but I'm going to know a lot of the answers. And, whatever we don't know, we're going to be able to find out in the coming days as we get a little bit more information on this. All right, the individual taxpayer benefits. This is straight cash stimulus, not taxable to you as an individual. I gave you a little chart here that I made up that kind of shows the adjusted gross income limits. If you're a single filer, a married filer, or a head of household, those numbers there, the 75, 150, and 112, that's the amount of money that you can make in order to receive the stimulus without having any limitations on it. And the next column there is a phase out. So, let's say you were single and you made $98,000. Your $1,200 benefit would move all the way down to like $100, for example. And so, what a lot of people have been doing is just jumping in. There's some really good calculators out there that lets you just put in your AGI and how many kids you have and that sort of thing, and it'll calculate out exactly what your benefit is. Each child that you have adds $500, which that's good for me because I have 4 girls. But anyhow, wanted to just give you a little chart here so that you could see what the stimulus payments were looking like. From what I'm hearing, if you file your tax return with your bank information on it, you're going to get your stimulus check direct deposited in the next 3 weeks. If you don't file with direct deposit, your check will be mailed out, and it's sounding like mailed checks are going to take a little bit longer. There's some news out there that says it might take up to 20 weeks longer. I doubt that it's going to take that long, but my guess is that they're going to figure out a process that doesn't take 20 weeks, because as all of us are hoping for, receiving money in 20 weeks is not really going to help. It'll help, and we're not going to turn it away, but that's not going to help for right here, right now. So the question of the hour that I've been getting on this is, well, what happens if I haven't filed my 2019 taxes yet? What are they going to do? They're going to use the 2018 return data. So, if you haven't filed, and then I'm getting a lot of people are like, well, I haven't filed 2018, 2017, now everybody wants to file. So if you haven't filed 2018, you're out of luck right now, unless you're a senior and you just have Social Security and you didn't have a requirement to file. But if you were supposed to be filing and you haven't filed, the IRS has no data on you, so there's going to be a little issue with you getting your check. So we got a little timing issue there. I mean, a lot of people have come to me and said, well, I want my 2019 return filed ASAP. And I'm like, well, that's you and everybody else right now. And the IRS hasn't given us any information about what a cutoff date is. So, if I file your 2019 tax return today, it might work. Okay, they might have the data in time before these checks get mailed out, but they have not let us know, hey, you have to have 2019 done by, whatever, April 10th in order for us to use that data. So anyways, we're playing the game a little bit. We're figuring out, hey, in 2018, I made a lot of money, but in 2019, I didn't make a lot of money. So let's hurry up and get 2019 filed so that I get my stimulus check. We're going through that quite a bit right now with people. Or we're saying, or maybe we have 2019 done right now, but the AGI is a little bit higher than the 150, but in 2018 it wasn't higher. We're waiting to file 2019 until after the stimulus checks come. So that's kind of a little bit of the game that we're playing right now. Some people have had additional kids in 2019 and they want their 2019 filed now so that they get another 500. All that stuff right now is stuff that we're trying to accommodate, and I'm sure accounting offices all over the country are trying to accommodate. But as a lot of our staff are working from home, our efficiency is a little bit slower, and a lot of you guys have been super patient with that, which I completely understand. But I just want you to know that we really are trying hard to look through everything that you guys really need in this situation. Now, a couple little situations, if you've moved since 2018, and let's say the IRS doesn't have the correct address on file for you, that complicates something if you're expecting a mailed check. All right, so you might want to call the IRS, get your address updated, or file the Form 8822 and hope that it gets processed in time. And like I said, I don't know if it will. Now, let's say if you didn't qualify in 2018, you haven't filed in 2019. The rumor on the strand, let's say your accountant or me, I'm like, hey, you know what? It's going to be hard to get this thing filed in the next 2 weeks. The rumor around the block right now, and some things that have been said, is that when you file your 2020 return, that you would get a credit for the amount of money that you should have received had 2019 been filed. So, you know, I don't really want anybody to think like, hey, I didn't qualify in 18, but I would have qualified in 19. I'm pretty sure the IRS is going to make that whole. If you deserved a stimulus, you just weren't filed yet. So I don't think I don't really see how, just legally or anything like that, that they can't have a mechanism in place for when you file your 2020 information. So or your 2019 information in 2020, excuse me. So something to think about there. Now, unemployment, this bill ended up loading up state unemployment funds a little bit better. I did see early on when all this was happening that some people were looking at a maximum benefit of like $400 a week when it came to unemployment. The bill ended up kind of adding a potential for an extra $600 per week that people could receive. And then instead of the typical 26 weeks of unemployment, that can actually go up to additional 13 weeks now to 39 weeks. So unemployment is kind of loaded up, and you know, we're going to kind of talk about that a little bit, because I've got a lot of questions from people who said, you know, my employer's saying that he'll pay me for the next month, or I could just go on unemployment and right now. And so, you know, I kind of had a little back and forth with some people on that, and it's really hard to say, hey, there's a direct path here, because you know, it really kind of boils down to how long do you think this is going to go? How long do you think we're going to be you know, sitting in a situation where, you know, only essential businesses can work, versus, hey, should I just take my month's salary and then, you know, accept a furlough after that? You know, maybe your month of salary might be, you know, more than what you would get from unemployment for the next, you know, even 8 weeks. It just kind of depends. So it's a little bit of a numbers game that that is hard to really say one way or another. And it really, I think, is going to depend on each person individually and what you think. Now, if you have a pretty good feeling that, you know, when all this is over, you're going to get rehired, it might be a little better to go on unemployment. And that way you give yourself a little bit more, you know, time to kind of let the economy kind of come back and when you get brought on. So anyhow, all that depends. It would depend. I'd check with your state to see what amount on a weekly basis you would be entitled to. That's going to be an important thing in the decision-making process there. But you know, just some things to consider. But from an individual standpoint, this is free, non-taxable money. Unemployment is taxable, and it is taxable, and you know, you could have federal withholding on it, but the stimulus money is not taxable. Unemployment is. As far as somebody's asking, has anybody done a cost analysis comparing going on unemployment? The problem with doing a cost analysis is there's not going to be something that is the same for everybody, because it all just kind of depends how long you've worked somewhere, what your salary is, and that sort of thing. So your unemployment benefits are definitely going to vary among people. And then, like I said, how long are you going to be out of work would be a consideration for me too. If you believe that you're going to be out of work for a long time, I would probably most certainly go on unemployment. That's got to be the way to go. And so, you know, that's definitely the way to go. Go unemployment. If you think you're out of work for 3 months, then you got to go, you probably have to go unemployment. But if you think, hey, like, you know, in Vegas here, you know, some people are saying, hey, the casinos are going to pop back open May 1st. I mean, you know, then you might just stay on salary if you can. So anyhow, that's kind of my thought on that. All right, let me kind of move on here. Whoops. All right, some big legislative changes that came, and I'll kind of breeze through these, but student loans, payments for student loans are suspended through September 30th. No interest is being accrued on that, so that's really good. All right, so, you know, that kind of helps some people out from having to make those monthly payments. A kind of cool thing that they've thrown out there for employees that want to do this, and I actually think that this will be a tax-free benefit that probably ends up sticking beyond 2020. That's just my opinion. But in 2020, employers can give a tax-free benefit to their employees of $5,250 to their student loans. So, you know, let's say all this blows over in a few months, things kind of get back going. Employers might want to encourage some people to come back to work, and they can pay $5,250 towards any of their employees' student loans and receive a tax deduction from as a company, and the individual would not have to pick it up as income. So kind of a cool little write in there to kind of help maybe get some companies to start working on paying some of those student loans down. Charitable donations. I'll just say, if you're in a position to do this, go make a donation. I mean, now is probably one of the best times to make a donation. And what they did this year is there's going to be a direct income offset of $300 if you take the standard deduction. So, I mean, it's not a huge deduction, but you know, a lot of people in the last 2 years have thought to themselves, well, if I'm not going to itemize my deductions, then I'm not going to make charitable donations. This is kind of a workaround to get people making some charitable donations, even if you don't itemize. This one right here, this next one on net operating losses, this is probably going to end up being a huge project for accountants, for small business owners. Okay, and this did happen back in the crash. Way back when I started my career, when we kind of crashed back in 2009, and a lot of businesses were suffering some pretty big losses, there is something called a carryback claim, and what they'll allow you to do is take losses and carry them back to years where you had income. So let's just say, and most people are probably going to be in this position, in 15, 16, and 17, and 18, you know, we all had great years. Business was great. You know, the economy's booming, all that sort of stuff. 2019 hits, 2020 hits, and you know, we got this COVID thing that put us down for 3 months. You're going to be able to, and let's say you have a big loss that comes through, you're going to be able to carry that loss back to a previous year and request a refund for prior taxes paid. So just to illustrate that, let's say you made $200,000 in 2018 and you paid $40,000 in taxes. And then let's say in 2020 you lost $200,000, just to be simple and easy. If you lost $200,000 this year, you actually can carry your $200,000 loss back to 2018, and you would be able to request a refund for the $40,000 that you paid before. It's a great project. I'm so glad they wrote this in, and they'll let you take that carryback period 5 years now. So, you know, what the new law changed in 2018 is that there was no carryback. Since 2018, we've not been allowed to carry back losses. We can only carry them forward. So what this new add-in here does is lets us take a loss that we had in 18, 19, or 20 and push those back into, you know, years 2013 through 2018. I got 14 through 18 for the example, but we got a 5-year carryback that's available to us. So going to be a huge tax benefit, probably a little less of a project right now, for most people, but I would probably say come year-end planning, what I'll be doing with people is talking a lot about what their income is for 2020 and seeing if we're going to be able to do a carryback claim. So something to kind of put in the back of your mind. Let's see. Payroll tax benefits. So employers who are paying payroll, there's an employee retention credit. So what you're going to be able to do is up to 10 grand, 50% of the wages that you pay payroll tax on, you're going to be able to get a credit, upfront immediate credit. And it would be included on your second quarter and Form 941, your quarterly payroll taxes. So if you're still paying your employees right now, even through this, and you've had a 50% decline in revenue and you had to suspend your operations, you're gonna get a payroll tax benefit right away. So you know, that's nice right there. There's also going to be a payroll tax deferral. So any of your employer Social Security or Medicare payments that you have to make on behalf of your employees, if you are paying that out through 2020, you actually can elect to not pay the employer side of it and then pay the tax into whatever tax was accrued. You could pay it by December 31st, 2021 and December 31st, 2022. So, you know, let's say you paid $100,000 in wages and you had $76.50 that you were supposed to pay in payroll taxes. You could stop that $76.50, keep the money right now, and then pay half in December next year and the other half in the December the following year. So just some little initiatives there from a legislative standpoint where it's kind of one of those things where maybe a little bit here and there is going to help with some things there. So just some stuff there. So let's see here. I got a couple little questions that I want to just kind of check in and see. I'll kind of get to some of these. I think some of these might be a little more pertinent as we kind of go through. Somebody said, can you income average backwards if 2020 is not a loss? On that one, it's going to just be annual. So there's not going to be, I'm assuming this is for the net operating loss carryback. If I'm wrong on that, just let me know. But you're not going to be able to income average. It's going to be one of those things, what is my losses in 19? What are my losses in 20? And it's not going to be like a July 1st to June 30th type thing. It's going to be on an annual basis when you file your tax return. So, you know, just hopefully that kind of answers your question. If it doesn't, then, you know, let me know and I'll kind of expound on it a little bit. All right, so moving on. All right, legislative changes continued. One of the biggest mistakes of the Trump tax plan was that whoever wrote the law ended up screwing up qualified improvement property. So, and what that is let's say all my restaurant, retail, you know, people with commercial offices, anybody that's outside of residential real estate and has non-residential real property, and they've done a build out, you've kind of felt the pain of this. So in the past 2 years, they screwed this rule up, and basically all your qualified improvement property has had to be treated as 39-year depreciable property, which really kind of stinks. Like it's kind of been, you know, I've had to, you know, kind of work with people, and it's like, wait, we spent $700,000 improving our space, and you know, we get to take $20,000 of depreciation a year. Like, that stinks, and that is kind of part of the problem with how they did that. The nice thing is everybody's known it's a problem, and they just haven't had an excuse or figured out a situation where they fixed the problem until now. What they've allowed us to do now is the qualified improvement property being eligible for 15-year treatment it has been written back into law, and they actually were able to backdate it too. So this is going to be another little project type thing that some of you guys are going to have. And so I kind of put the note here, anybody who has improved the commercial space in the past couple years, you need to call me, because we're going to be able to go back, and instead of taking 39-year treatment on maybe a build out or a remodel of a commercial place, we're going to be able to go back, do a cost segregation, get a lot of your stuff at 15-year treatment. And when you get a lot of those improvements at 15-year treatment, you're going to get to take 100% bonus depreciation on that. That is so awesome. So if somebody, and I have a few people that I know who are going to listen to this, who are going to be in this spot, but you might have spent 700 grand doing this, and if you've only been taking $20,000 of depreciation this year or per year, we might have been able to take $300,000 worth of depreciation in 1 year, which is going to give you a great tax refund, which even might create a net operating loss for you, which you then could carry back into previous years. So there's going to be a couple of things there that we really can work through that might be well worth the time. If you were looking at, and unfortunately I know a couple people who, you know, had some big plans prior to this this pandemic that ended up happening, and fortunately there's relief for you there too going forward. I mean, we're going to have 15-year treatment and bonus depreciation on improvement property going forward, which is going to entice more people to kind of jump in and you know, keep that kind of economy brewing that way. So that's one of my favorite things, especially as a real estate CPA. I do a lot of real estate work. I love that they were able to finally correct this this technical mistake that they made. All right, I also really love retirement plans, and retirement plans right now have a lot more flexibility. If you don't have a great financial advisor, it's an important time to have one so that they can help navigate through this. I know a lot of people out there right now are struggling with, hey, what do I do with my money that's in the market? You know, should I sell? You know, I want to, you know, be on track for retirement and those types of things. I know all too well all those questions are going through your head, especially people who are retirement aged. And so having a great advisor right now is really important. And so that's why I kind of added that to the slides here. But from a retirement plan standpoint, I know a lot of people have retirement plans, and you know, a lot of times that money is locked up till you're older. And what they've done is they've made it to where that retirement plan actually gives you some more flexibility. So if you have money in your 401k, your IRA, you're going to have an opportunity to use it if you need it. All right, a qualified participant by definition in all this is you or your spouse got COVID-19 or your job was affected by COVID-19. So yeah, if you are working less hours, you got laid off, all that type of stuff, you're a qualified participant for some of these rules. I'm going to start with the plan loan, because the plan loan would be probably the most ideal piece of this. You are now able to take 100% of whatever is in your IRA or 401k up to 100K. You could take that loan over the next 6 months, and you would not have to make any plan loan payments for a year. Now, interest is still going to accrue on that loan, but if you had 50 or 100K sitting in your IRA or 401k, you want to take a loan so that you have financial flexibility right now, you're going to get a minimal interest rate and you don't have to make any monthly payments. A plan loan could be a great idea right now. Okay, so you know, hopefully that ends up kind of making some sense to you guys. I would start there. If you really were going to access your retirement plan money, I would start with the loan. That kind of gets me segued into another option, which is the plan distribution. So typically, if you're going to take a a distribution, you know, let's say I'm 35 and I want to take a planned distribution, and you know, I take 50 grand out. If I took 50 grand out, it would immediately be taxed at my ordinary tax rate. They would have to withhold 20% for taxes automatically. So that brings my number down to 40,000 of the actual 50 that I end up getting. And then I would get a 10% penalty for taking it out early before I'm 59 and a half. The 10% penalty on a planned distribution is waived right now up to 100K. So there's no penalties on 100K. The next thing that's awesome about this is that if you took, let's say you took 100K, you can elect to have that taxed over the next 3 years. So if you have that taxed over the next 3 years, that's actually you know, 33,000 a year, let's say. So you have access to that 100 grand, and you really actually just have a great opportunity to kind of spread that out over time. Okay, so you know, take a peek at, you know, so there's planned loans, there's planned distributions. Now I want you guys to know that you have, you want to take a look at, you know, if these things are employer sponsored, if, you know, they're just kind of, you know, regular rollover IRAs. You know, you want to make sure that all the loan documents, and there's going to be different things that go to this. This is the framework, okay? So that's why I kind of say have a great advisor, because there is some clarification that needs to kind of be made here. Some of your plan documents are going to have to be changed up. Employers are going to have to change their plan documents. There's going to be some things here that is going to take a little bit of time to implement. So I don't want you to think like, hey, I can call my advisor tomorrow, he's going to cut me a check for 100 grand right away. That might not necessarily be the case. There's going to be some rules there that we're going to get a little more clarification on, and that we need to make sure that we know. So you know, stuff is going to be employer sponsored versus just IRAs that you have kind of rolled over on your own, and employer sponsored plans is going to be where you can actually, you know, take these loans and not have the repayment. Okay, so, you know, let me draw a little line in the sand there and kind of explain that, have that explained a little bit better. So 2 options, loan, distribution. I'd start with the loan. If you can't do the loan, go to the distribution and have that spread out over the next 3 years. The other option is you actually can repay you can repay some of that distribution. If I'm pretty positive this is the case, you can repay your distribution that you took and not have a taxable event. So, you know, some flexibility there. If you're over 72 or you're turning 72, your RMDs can be waived for 2020. And I know a few of you guys have DB plans. Those contributions are typically the date of the tax return. You have to make those contributions by the date you file your tax return. Right now, that's been extended out to December 31st. Okay, so just a couple things there that I think are very worth mentioning. Somebody asked, what if I already took a loan from my PSP? Do we pay it back and then take out another loan with the new guidelines? Yes, yeah, you're going to definitely do that. You know, this isn't going to be retroactive back to old loans. This is going to be loans that you take right now. Okay, and actually you have to take that loan within the next 6-month window. Okay, so you know, we're going to start acting on that now and kind of work through that. It's probably going to, my guess is that it takes about a month. It's going to take about a month. All right. So let's kind of keep moving on here. This is probably what you guys all want right here. This is the meat and the potatoes right here. The SBA loan, you know, the different options. Okay, I know a lot of you guys have kind of have been going through your options, and I want to you know, just kind of highlight some of these things so that you can definitely make sure that you're making a good decision in what you're going with here. All right, so the first one I'm going to start with is the triple P, whatever it's called. People are calling it different things, but Paycheck Protection Program. All right, this is something that has come out in the past couple days. So if you started your SBA process a week and a half ago or 2 weeks ago when all this started, this Paycheck Protection Program loan is something that's a little bit new. $349 billion is available, for this. And so that is a lot of money. I just got like a mind blown by how much assistance is going to be out there. All right, so the Paycheck Protection Program, if you have fewer than 500 employees, you've been operating since February 15th, you've suffered business disruption, you can qualify for this. Now, what you're going to calculate is 2.5 times your average monthly payroll. All right, now if you use like ADP or you're running payroll, you're probably going to have pretty easy access to some of these reports, and so it's kind of simple. If you have one employee and they make 10 grand a month, you can go out and you can ask for 25,000. Okay, so that's what they're going to go with. Now the maximum interest rate is 4%, and I'll get to that in a minute. But any of this money that you end up requesting, if you use it for payroll, for healthcare expenses, for insurance, key man insurance, different insurance on people, health insurance, rent, if you're in the rental business and you're using it for mortgage interest payments or payments to keep your rentals going, utilities and things like that, you're going to have an opportunity to get money forgiven. Okay, it's going to be more of a grant than a loan. Okay, so you're going to have a 10-year repayment plan on unforgiven money, and any of the money that you go out and spend between February 15th and June 30th is where you're going to have that forgiveness window. So you can kind of see that it's encouraging businesses to keep their employees and keep paying them on loaned money. Okay, so there's going to be a calculation of this. Is kind of what it comes down to. So if you go out and you say, hey, my payroll is 20,000 and you request 50 grand, and we go through the calculations, you show me what your payroll, your healthcare, all this different stuff is, we're going to be able to calculate out what part of that money should be forgiven, what money should be unforgiven is going to get taxed at that 4% rate until you pay the loan back. Okay, so I did get a couple questions where they said, well, what happens if we get the money and we don't use it for that stuff? Well, then it's just a normal loan, but it's a loan at 4%, which isn't too bad. Okay, so I've seen some calculations. We're going to be doing that. I'm sure we're gonna be helping you guys out with some of the forgiveness piece of it. This is where everybody's out saying, hey, there's free money to be had right now. Okay, when you see any of these headlines that are saying, hey, we got free money, this is what we're talking about here. Okay, so with these loans, no personal guarantees. People are reporting to me that the application's pretty easy to fill out. I actually went through, and I'm not necessarily doing it for myself, but I filled out a mock application and it took me about 10 minutes. And so, one thing that I want to say is that I think that if you have employees and you're out, trying to figure out what you're going to do, I think this is a no-brainer. You got to go down this road. Now, what I will say also is that there's no other word for it other than idiots that are out there trying to charge you guys thousands of dollars to fill out these applications for you. Okay, if they're trying to fill out these applications for you, do not work with them. Okay, and in my experience with this so far, it is so much easier for me to support you in filling out your application and answering your questions than going out and paying. I saw one scenario where somebody wanted 75 grand and somebody was trying to charge them $5,800 to do this. I mean, it was just highway robbery. Okay, so you know what I'd say on these paycheck protection loan programs, you're going to want to work with a participating lender. Great, thank you for bringing that up, Sat Pal. You know, these are your community banks, okay? And if you're in Vegas, you know, I have a guy that I've been, you know, talking to, and I do his taxes, and he emailed me the other day. He said, if anybody needs help navigating their way through this, you know, we're here to help. And so your banks and your credit unions are spearheading that. So you're going to work with the banks on this, which I'll let you know that working with the banks on this is going to be it's going to be a lot better than working with SBA on it, okay? This is definitely going to be the easier road to go down. And so, you know, just keep that in mind that, you know, banks, I think from a process standpoint, are going to be a little bit easier to work with, and they're not going to be as overwhelmed because these are your community banks that you're working with and your community bankers. So, you know, just this is a good route. I really think that a lot of people, a lot of my clients are going to use this and are going to go down this road. So, got somebody asking, a couple of my rentals are vacant and I can't get new tenants or applications due to coronavirus lockdown. Can I get a loan to pay the mortgage while they're vacant? My understanding is yes, you can do that. Somebody else kind of dropping in here and saying that the application's easy. People are asking about sole proprietorships. My understanding is that sole proprietorships and contractors, if you're an independent contractor, that there's going to be some that there's relief for you guys too, even as a sole proprietor. If you have a short-term vacation rental, an Airbnb, my understanding, as long as you're using that money to pay your mortgage interest and you're making your mortgage payment, the mortgage would be deductible. The interest, or sorry, the principal is not forgiven, but your interest is. Okay, so if you've got short-term rental and you're paying utilities, or you got vacant rentals, you're paying utility and hazard insurance and that kind of stuff, my understanding is that that is going to be the forgiven piece of this. Now, you know, I would definitely always kind of check with your lenders and that sort of stuff just to make sure that they're going to do that. But that is going to be the forgiveness piece. Let's see. Household employees. I have not seen anything about household employees. I don't think you're not going to be able to get this to pay a household employee, but you can check. You can check. Somebody else mentioned that their payroll company is automatically generating a monthly average payroll report for them, so that it's super simple. So talk to your payroll company about that as well. So they might be doing something like that too. This is a smaller company, but I'm sure the bigger companies are going to have something similar to this. Okay, so all right, let's see. It says, does masks, wipes, hand sanitizer count towards expenses? Should we allocate for open bids that we have pending hours that we can use? What I would say that any of your supplies for your business probably are not going to count for this. The things that have been highlighted is what I put in the list here. So your supplies for your employees are not going to work, but if you have payroll that you are paying out, that will work. Okay, so you know, if you have pending hours of people working and you're going to pay that out right now or over the next month, then you're going to be able to get forgiveness on it. Okay. All right, so I think I got through a chunk of the questions there. Repair costs for the property is going to be a no. I don't believe that's going to work. An S corp with 1 employee, that should work. Will you get a stimulus check if you owed in 2019? Outstanding tax balances are not going to affect the stimulus money. The only thing that I've seen that is going to affect the stimulus money is if you owe back child support. If you owe back child support, you are not going to receive a stimulus check. Okay, and I've seen a couple people complaining about how unfair that is. Okay, but that's the only exception that I've really have seen. Okay, all right, so let's move on. Let's take a look at the economic injury disaster loans. This was kind of what came out first. Okay, EIDL is what we're calling this. Fewer than 500 employees, you have to be operating by January 31st and suffered business disruption. On this one, there's no there's not a forgiveness on the loan that you take. Okay, so you can borrow up to $2 million. The maximum interest rate is 3.75. This money can be used for any element of your business. Okay, so a lot of you guys that were asking about some of the other things, you can borrow and use the money for that type of stuff. There's no repayments until a year later. Okay, so interest is still going to accrue, but no payments are going to be needed. This application process is through the SBA. This one, they're going to consider your credit score. They're going to consider collateral. They're going to want to see your tax returns. They're going to want to see, what your prior 12 months of income is. And so, and if you end up taking over 200,000, there's going to be personal guarantees on this. Okay, so this economic injury disaster loan, it's probably for a little bit bigger of a small business. Okay, and a lot of people have said, hey, how much should I take? I don't know how much to take. And they're kind of questioning that. I've kind of just given my opinion on it, okay, and have tried to give some ideas on how much I think they should take based on what their operating expenses are. There's a side of me though that's kind of like, okay, you know what? None of us know how long this is really going to drag on, and you know what? We want to operate our businesses. We want to stay afloat. Just an idea that I'll throw out there for you guys is, what's wrong with taking, let's just say you take double or triple of what you might actually think. Let's say you take double of what you actually think. All right, and you hang on to it for 2 months. Okay, at least you ended up having the money in case, right? Maybe you paid a little bit extra interest, but let's say things are up and going again and we're back to normal in July. And business is good again, just give the money back. Okay, you paid a little bit of interest for security. So, think about it like that. Like I said, if you have any questions, a lot of people started filling out these applications, and then when they saw the Paycheck Protection one come out, then they're like, whoa, wait, we want that one because we can get forgiveness on a lot of this stuff. So, what I might suggest to you guys, because there is this emergency $10,000 grant when you fill out the EIDL application, it's up to 10 grand. I think a lot of stuff on the internet is saying, hey, you can get a free 10 grand. All of it really depends. They're not just handing out a free 10 grand to anybody who fills one of these things out. I mean, they're looking at everything. Okay, so if you did want to go and you want this grant, you think you qualify for this grant, the 10 grand is forgiven. Okay, it doesn't need to be repaid. It gets direct deposited into your account within 3 days of the application. So keep that in mind. Now, the 10 grand will be offset with any PPP loans that you have. So overall, I think like you have 2 options here. One is kind of smaller. The EIDL is probably a little bit bigger, and you could borrow more money through it. What I would probably do if I were you guys, depending on the size of your business, I'd probably apply for both. Okay, if you end up applying for both, you get your PPP loan, and you use that for the stuff, you get, you know, maybe all of it or some of it, most of it. If you get it all forgiven, that's great. If you get an economic injury disaster loan as well, maybe that's kind of your safeguard, and maybe you get an emergency $10,000 grant that doesn't need to be repaid. Okay, so, you know, I want you guys to all kind of look at these things and kind of think about it like this. All right, if you need the money, let's go through this process. This process here is for people who have suffered business disruption. I know a lot of people out there right now are thinking to themselves, well, I want a free 10 grand. Who wouldn't, right? We all want it, but you have to have some kind of business disruption, and you have to have a legitimate business too. Otherwise, this isn't really going to come into fruition for you. There's a lot of money that's to be had out there, but there's a lot of money that's to be had so that it's directed in the right ways. Okay, now somebody said for rental properties, is the EIDL the way to go? It probably is, but you probably still could get some forgiveness through the PPP loan because you can use it to pay mortgage interest. So so that's one thing. Now, another question is on the PPP, do we have to go back 12 months on our average monthly payroll, or can we do a shorter timeline if we've recently grown and added staff? They actually, I think what they're doing is taking the previous 2 months, your most prior 2 months, okay? Somebody clarified and said that the 8-week period that we have for the loan is February 15th to June 30th. Thank you for adding that. That's the period where you can pay those expenses for forgiveness. Somebody asked for payroll. This means gross pay, right? Yes, it does. And yeah, okay, cool. I got through those questions. So if there's any other questions on the loans, I mean, this is kind of, you know, a summary of them, okay? Going through the applications though, if you have any questions, just let me know. I mean, and I'm being straight up with you guys, I'm answering all these questions. I'm not even charging anybody for this, okay? So if you have questions on this stuff or you want, feel free to email me, shoot me a call, text me, whatever you guys need. It just bothers me the fact that there's people out there that are just trying to, like, you know, capitalize on something that, you know, they think people don't know about in such a way. So if you're seeing that, I understand. So what you should be doing is filling out these loan applications right now. It's first come, first serve. An important thing is to have your bookkeeping updated. When you apply, you're going to need revenue and expenses from the prior 12 months. Have your, a lot of other things I've seen in the application was EIN, the date that you started your business, your bank account and routing number if you're going to get an EIDL loan. All right. I would say that if you are applying, especially for an EIDL loan, start the process of getting your taxes done. They're probably going to want to see those. If you have any other questions, reach out to me. I think I talked enough about applying for both loans, and whatever money you can't use, just handing back and giving back. And I think overall, I feel like most of my client base is going to be best served with the PPP loan, but that's not me discouraging you from getting a EIDL loan if you want to go down that road. Okay, so let's see. I am going to, let me scroll through some questions here and just make sure that I answered everybody's questions, and then I'll kind of wrap this thing up. Okay, so somebody says, if I'm the president and a W-2 employee for my C Corp, am I eligible for unemployment? Yes, you are. Has anybody done a cost analysis between going on unemployment versus the Paycheck Protection Program? So as far as that goes, what I would say, as far as going on unemployment goes, this is just my opinion, but it's hard to do. I think I talked a little bit about it being hard to do an analysis, but the Paycheck Protection Program, if you're going to use it for wages, it's going to be forgiven over the next 2 months. So 2-3 months. So to me, I would do the Paycheck Protection Program because you get your regular salary versus unemployment, which is probably going to be less than what your normal salary is. So I would do the Paycheck Protection Program for the next two or 3 months, and then if things aren't where they need to be, then go on unemployment after that. Let's see, got a girl that turned 18. Will I get the money for her, or because she didn't file in 2018 but has in 2019? There is a little bit of an issue with dependents on this. So if you're claiming your kid as a dependent and they're 18, they're not gonna get a their own $1,200. Okay, so there's a little problem with that, but on some portion. But if you're not gonna claim her as a dependent, then I believe she should get it. Let's see, I got through those. And if you have more questions, start shooting them through right now because I'm about to wrap it up. Let's see, if the forgiveness period for expenses during the 8P, oh wait, no, I went through that. Okay, actually, I think I might have got through all this. Where can we find an SBA bank to help with loan processing? I was able to see, if you just did a search online, I was able to see an approved list. An approved list is what I was able to see of SBA clients or SBA banks that work through this. So that would be the spot. I did not save the link, but if you need help finding it, let me know. Any help for the C Corp flipping properties? The EIDL loan would be the way to go on that one. If you were going to get loans for your flips, that would be the way to go on that one. Let's see. My wife is receiving a pension as well as being a W-2 employee. Is she eligible for a UI? I believe so, but you're going to want to check with the state on that. Let's see, do you know if employees are eligible for unemployment if they have not been with you for at least 6 months? I believe they still are, but again, you're gonna need to check with the state on that. And I feel a little bad that I keep saying that, but just so everybody knows, I have clients that are in almost every state, and to know all the ins and outs of the unemployment rules, I'm not that well versed on, so my apologies there. But I believe that if they're not there for 6 months, they probably can't get a full benefit, but there probably is some little bit of benefit that they can get because you've been paying into unemployment for them. Let's see. Someone clarified and said that they found out that you have to use 2019 payroll averages unless you're a seasonal or a new business. Okay. Somebody took an annuity distribution March 12th. Does it fall under these guidelines? I'm going to say that that is going to be still to be seen, but those are the types of things that we're going to need to get a little clarification on. Is if you took a distribution March 12th, there might be a cutoff date that might be somewhere in my head, but I don't know for sure, so I'm not going to say right now, but I'll work with you on that, just so you know. Okay, I know that's a lot to bite off and chew on. All right, I've been working on this webinar for a day or so, and I've been reading stuff for 2 weeks on it, and at times I felt like my head was going to explode. But you know what? We're breaking it down. We're learning new stuff every day. I'm doing what I can to make sure that I support you. We do have a tax deadline that's extended to July 15th, which is nice, but for this type of stuff, there's more urgency. And so we still have tax season kind of going, and so, I just appreciate all of you guys. I'm really fortunate to have a lot of you guys as clients, and I'm just sorry that some of this is difficult times, but I know we're all resilient and that we'll get through it. If you have any other questions or comments, feel free to email me. I put my email on here. If you want my slides, shoot me an email. I'm happy to provide the slides to you. But I'm grateful to do this webinar, and I hope that that all of you guys are hanging in there and doing well. So appreciate you guys, and hope you guys all stay safe and healthy. Have a great one.